Hello guys. I have explained before this question, and I will give more details for other people who have not seen other videos in order to understand some fundamental basics in trading and investing. I will give you something insights that will help you understand the big picture. This thing is why some stocks move with their industries and sector. Now, what does it mean? It means sometimes you see in industry, you go online and they tell you, for example, this industry or this sector has moved up 80% last year. Okay? This is the information they give you, but they give you, the information they give you, past information. It means for last year. Okay, they will never know what will happen in the future. Now, this information. Now, what does it mean when they say this sector or this industry has moved 80%? It means that most of these stocks have gone 80%. Most of them, not all of them, because in industry or sector, most of the stocks follow its industry index, which is the average of all the stocks. I will give you an example of a stock that of a sector that goes down. I always give you this example because you know it very much and it affects your life. Energy sector, for example, the oil and gas companies. Almost all these companies go down in the price. So why all of them go down? You ask yourself. Is there a problem with these companies? Obviously no. This is the stock market game. It means a lot of mutual funds, they sell the shares of this sector, of these stocks. They sell them. They don't like them. They don't want them. Don't tell me why this mutual fund they sell. You can't ask this question because each one is free to do what he wants in the market. For example, you right now, you go and you buy a stock. Who can stop you? You have money, you can buy any stock that it is in the market. Who cares? It means you are free with your money. Now, a mutual fund or these big guys who have a lot of money, like billions of dollars, they want to spend in the market, they do whatever they want. They are free. And this is the freedom of the stock market. So you can't stop some people from buying or from selling their shares. And this is the real market. So, if an industry or a sector like energy sector before, with all its industries, stocks, they go down, it means that most of the investors, most of the mutual funds, they see that this sector is moving down, so they sell. Now when they sell, there is a big trend. This trend could be 1 year or 1 year and a half, and you see these stocks are going down, are going down, are going down. Okay? And you see it in the chart. And you ask yourself, these companies are doing good. It means they are still drilling and they are extracting oil and gas and they are selling, and they are good companies, and they are for 60 years, 80 years, 100 years, and they are good. So what happened in the market? The market is a game. And the big guys, mutual funds or pension plans or anyone who has money, they play with the market. They do wherever they want. And this is the market. So, let's say they sell energy sector and you have seen that they sold it. They can't sold it in 1 year, but they sold it in many months. It could be 1 year and a half. It's about 18 months. And if you see the chart, you will see that I have made a lot of videos showing the trend down. Okay? Now, why we have the trend, a very, very long trend down, It's just because mutual funds and pension plans, they don't sell in one day. They try to sell little bit by little bit because they don't want to show their hands to the market. And you tell me why? It's just because they want to get better price when they sell. For example, the stock is $100. If they sell 1 million today, the stock will be $92. So they lose only $2. So they sell with $98, which is very good price. Now they have 1 million shares to sell tomorrow. So the stock will be let's say $96. So it's a good price also. But what if they want to sell 100 million shares in that day? Do you think the price will go just from 100 to 82 for example to $98? They lose only $2? No. If they sell 100 million, they put too much shares in the market to sell. The day traders, they short sell with them. So the price will be going from 100, it can go to 70 or to 60. And mutual funds, they don't want to get $60 for their shares. They want to get 90, 95, 98, $97. So you understand why they don't sell in one day? It's something that I explain, and you can see it in the market, and you will see it works the way I say. Okay? So sometimes like last year, the beginning of 6 months of 2016, I have been making videos the whole 6 months about utilities. And the utilities, they were going up. And in my membership subscription, when I do a search, I show utilities stocks as moving. Some people, they buy, they make money. Now, and these things are very easy to detect if you follow the market with my search criteria and you follow my strategies. Now, when a sector moves, most of the stocks moves up with the sector. Why? Because the people, when they see stocks begin to move, they just buy. There are a lot of people who wait for opportunities. They are not day traders. They are, for example, like me, a swing trader. They follow opportunities in the market. When they see something begin to move, they try to search for few stocks, and they put all their money there, and they wait for days, weeks, 1 month or two, and if things going well, they will make too much money. And this is how we make our money as a swing traders. We follow trends in the market. Okay? And this information that I'm telling you, you will never find online. So stop searching online and you go to these gurus and they will show you when to buy and what to sell. No one will know. Just you follow signals. If things works good, few days, few weeks, the stocks begin to go up, you will make money. If you are wrong, you should exit. That's it. It's so simple strategies. It's not difficult. And you can learn them. They are simple. They are easy. They need only practice. Practice, practice, practice until you succeed. Because success, it's you who make the success. It's not someone else. It's not someone who is working for you and makes you successful. It's you. By your practice, by understanding the market, you become successful. Okay? So, as I told you, when the market is going up for an industry or a sector, you will find that there is a trend beginning to form. And at the beginning, the trend is not seen well. You should have a strategy like mine to search for stocks and to see the beginning of the trend. because you should at least begin with the beginning or in the middle, what we call the meat of the trend. But at the end, you will find nothing. You find what we call the bone of the, because all the meat had been eaten. You have the bone, and then when you put your teeth on the bone, you crush your teeth and you lose money. This is what the beginners do always. So it's better to begin with the beginning of the trend, and then you can make money from it. And it's the same people. It's the same mutual funds. There are hundreds, there are thousands of mutual funds. They buy when they see there is, because one big mutual fund who have billions of dollars, there are some mutual funds who are smaller. So the smaller follows the big ones. It's like fish eat another fish, okay? And the fish, they follow each other. So when they see a big fish in the market, and the market becomes bigger and bigger, all the small fish will join, like swing traders, like investors, and they join this trend, and it can take 1 month or 2 months or 6 months or 1 year. It depends on how much the trend is, and then you can make money. Okay, so thank you very much for watching. If you have any questions, just write questions or send me a private message. Here is my email on the top of the description. You just send me a private message and ask your question. Thank you very much.